With world-class expertise and local insight, Dexus creates value, not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, welcome to the COB. It is May the 27th and I'm Nadine Blaney.
I'm Juliette Sarli. Let's have a look at where the market has finished this Tuesday, and a pretty solid, impressive end, you would say, Nadine, because we were going pretty much nowhere up until lunchtime. But we have seen some gains coming through. Of course, US markets will come back online after that long weekend, and we had a spike in US equity futures after, of course, we had the trade shift between President Trump and the talks that he had with Ursula von der Leyen.
Yeah, I just had a bit of a giggle because it's only Tuesday. Why does it feel like it should be later in the week? We'll hold on to these gains, though, on this Tuesday afternoon because, look, there's a lot for markets to digest. We've got some M&A happening in the copper space. We've got some commentary coming from the Chinese authorities in regards to pulling back on steel production. And of course, we do have some big economic data reads coming, particularly here tomorrow. We get an inflation read, which will be an interesting one to watch, considering we've had now 2 interest rate cuts coming from the RBA.
Yeah, and that spike that you saw at the end sort of taking away somewhat of that ho-hum session, but it was feeling that most of the day. There wasn't a lot going on. We're looking at what's happening with copper. We're looking at what's happening with iron ore, but it's really hard on these days when you don't have a strong lead coming through from Wall Street. Of course, the focus continuing to be, as we mentioned, these trade talks. Let's have a look, though, at those copper players, because there has been a big boost coming through in some of these stocks. Sandfire Resources up by about 4%. I mean, the big one that is not there on that screen is, of course, Capstone Copper, and it comes as we saw that play for Mac Copper as well. So, and of course, a spike coming through in the overall commodity, but
it's just one of those areas of the market that it's hard to find somebody who's negative on copper, and it's hard to gain exposure to copper on the ASX, once we had Oz Minerals taken over by BHP. So yes, certainly a sector to watch. In fact, when we talk about sectors, Jules, we've got 7 out of the 11 now higher. And Infotech, the best performing sector, so not the one that we see on our screen right now. Gold actually having quite a hard day today.
Yeah, Newmont XDiv as well. All right, let's have a look at the telcos, because we had an update from Telstra today. We were talking about this in one of our editorial meetings. I mean, AI is really where they're focusing here. They're trying to push further into that infrastructure build as well. Vicki Brady didn't signal any specific job losses, but she was asked whether the workforce would look different in 2030 than it would now, and she said yes, it would.
I think it most certainly will. You know what I was looking at on in the news, actually it was overseas news today, is how much these data centers are damaging water supplies in some areas, close to Mark Zuckerberg's massive data center, I guess related to Meta. Some of the rural residents are seeing their water supply being very negatively impacted. So I wonder if water is one of the next frontiers.
I know, I feel a bit guilty sometimes when I use ChatGPT. What is that, like pouring a whole bucket out? All right, REA Group, of course, in focus. Shares falling here, and this is after we heard news that the ACCC is looking about whether it's been misusing its market dominance to hike prices unreasonably.
Yeah, so there's falling off a cliff once that news came to light. I think that was after the AFR put some questions to the company confirming that the ACCC is looking into it. IAG says it's received around 2,500 claims as a result of flooding on the mid-north coast of New South Wales, along with the Hunter region as well.
We mentioned Telstra there, that Connect 30 strategy day that they held today.
4D Medical had a really good day, jumping significantly after submitting an application for regulatory approval of one of its products. It's a lung imaging software product.
And Vulcan Energy, it actually fell. It was higher earlier in the session, but it's commenced drilling of the first new well at its Phase 1 Lionheart lithium project in Schladerberg, in Germany, shall we say. That's the 5th, though, within the project's remit.
And RBC Capital Markets have downgraded Origin Energy after it lowered its earnings forecast for its UK business Octopus Energy. That's for the second time this year. I think yesterday they were saying that it was in relation to a warmer season in the UK that brought about lower demand.
All right, let's get to our guest for this Tuesday, Martin Crabb from Shaw and Partners. Good to see you, Martin. You've been on the road. So valuation support, where is that for the local market at the moment?
It's evaporated, particularly after today's move. So how do we measure, the valuation of the market? There's lots of different ways to do it, but one kind of simplistic way that's quite useful is just to add up all the target prices that every analyst puts on the stocks in the market weight that, and then come up with a bottom-up estimate of where the market thinks the shares are worth in a year's time, so 12-month forward target prices. So if we do that and then compare that to the current market, so that's the black line, is all of those individual analysts' forecast consensus across the market. So two things to note. One is that the market is trading very, very close to that level. So the TSR, the difference between the two plus the divvy yield, would now be below 4% after today's move. So, you're better off in cash market than the equities market based on that. The other thing is that the line's coming down. So the black line's coming down, which means people are revising down their target prices. So we don't mind paying full value. So when that orange line hits the black line, as long as the black line's going up, because we're getting growth in earnings, we're getting growth in target prices, and the market will ultimately grind higher if that's the case. But what we're seeing, in the last probably 3 or 4 months is downward movement in target prices. So the gap's narrowing for the wrong reasons. A, the market's headed up, but B, the target price is coming down. We like the grey line just as a common sense. What level do I buy the market to make a 15% return, assuming those target prices are reached, which is, they're estimates, right?
Yeah.
But that's kind of, and you can just see, this is going back to 2018, you can just see when the market tends to go down below that grey line. It doesn't stay there forever. And as long as the prices are being revised up, then it's usually a good entry point. We had that in Liberation Day. Obviously, there was a lot going on then, but that looked quite good. So just another chart I sent through was a difference between how people are feeling and what they're doing. So we're just looking at a couple of different measures here. Turning to the US market, the black line is the University of Michigan survey of consumer expectations, and that's this is about as bearish people get. So this data's here.
I think it's blue, Martin.
I think it's black. I think it's pretty sure it's black, but it could be your screen. But anyway, the darker colour, for those who have black and white TV, the darker colour is sentiment. And, we've got this all the way back to the 70s, and people don't get more bearish or more negative than they are today. The red line is actually what people are spending at department stores. So the Red Book Index is updated every week, so it's about the most contemporaneous data you can get. And it's telling us that Americans are still spending 5% more than they were last year. So although everyone's negative, we're still out there spending money. So it's this soft data, hard data argument that everyone's toying with, or grappling with, I should say, is that the soft data, all the surveys, people are jumping out of buildings, right? They're so bearish. And even in Australia, the consumer sentiment data from ANZ today was a bit on the soft side. Yet we're all out there spending money. We've all got a job. We're all getting pay rises. We're getting maybe some interest rate release. We haven't seen the impact of the tariffs coming through. So what is there to worry about? Now, our view is that it's coming, so don't get too carried away with the hard data today. Think about where the hard data is going to go. So that's why we're a little bit concerned about the market.
So so you're saying don't be complacent if you're in the market. So are you looking at selling, or what have you been selling, or are you already cashed up?
Yeah, we tend to be fully invested across most of our portfolios. Most of our clients come to us and say, look, we want you to manage a diversified portfolio for us, or a share portfolio. So we don't tend to move to cash. If we're defensive, we either move into fixed income, or we look at liquid alternatives, things that give us a bit of an airbag. So the most recent change we've made to our balanced portfolios is to reduce equities, is to take a bit of risk off the table. Not massively. We're not massively underweight. We're probably 4 or 5 in a 70-30 portfolio. So we're not cashing up completely. But we're just saying that where the valuations are and where the potential direction of earnings is, it's down. We don't want to be overweight equities, but we still want to be in the market because there's still a lot of growth, there's still a lot of creativity, there's still a lot of good companies. Things like the Mag 7 will continue to grow their earnings. So we don't want to be out of the market altogether, but we just want to be less than we normally would be.
I feel like your mate Fraser must be pretty happy at the moment, given he's been banging on about uranium for a long time, finally seeing those players go nuclear. Your thoughts on the executive orders that President Trump has signed?
Yeah, I think it's just, Trump's been, I suppose, pro-nuclear for quite some time. I think it's just another data point in what is a very emerging positive story around uranium. And whether that's, China's plans to roll out or to speed up the rollout of reactors, it's clear that the utilities have not been buying uranium. They've been running their stockpiles down, and they will have to come to market. There's a conference on, I think, next week that's going to have some of those speakers at that, which I think will add more fuel to that fire. So we're bulls on the uranium story. We have been for a while. Our analyst Andrew Hines has been positive on the sector for a long time. And the big sell-off that we had in April in some of these names has created a really strong buying opportunity. The other thing is that despite this, we think quite a constructive outlook, these are the most shorted stocks in the market. So, there's going to be, if we're right, if we're right, there's going to be a squeeze. Because if prices are going high, you don't want to be short these stocks. So whatever thesis the short sellers have had, it's probably played out, and now we think the bull case is starting to build. And I'm sitting there running a hedge fund, and I'm 20% short Paladin or something. They'll have to go and cover that. So whatever rally there'll be will probably be steeper than it otherwise would be, because those shorts will have to cover.
Now, copper, we were talking about off the top.
Yeah.
Some M&A likely here in Australia.
Yeah.
What does that mean? We don't have many ways to gain copper exposure here, so does it just push up the price of, like, a rising tide lifts all boats?
Yeah, well, there's as you mentioned on the open, how do you get exposure? The biggest players in copper are Rio, BHP, Antofagasta, these other companies that you get a little bit of copper, but you get a truckload of iron ore and other stuff, right? So the pure plays are Sandfire, which is in the ASX 100.
Bit exy, you'd think, if you're talking valuations earlier.
It is, but if you want to get set, it's like it's the stock you have to buy. So we own Sandfire in our core portfolio. We've got a 2.5-3% weighting, because what we'd really like to own more copper, but we can't just go and buy BHP because we're getting a truckload of iron ore. The other one's Evolution, right? Evolution's been great because it's got the copper and the gold, and they're both probably, along with uranium, copper, gold, and uranium are the three commodities you really want to own. You want to avoid bulk commodities, because at some point China's going to slow. And you mentioned that earlier, is that maybe steel production's peaked. So you don't want to be there. So can you somehow split out copper, gold, and uranium? So Evolution is one that we've owned in our growth portfolio. We do own. And then Sandfire is a pure play. But, the juniors and the explorers are also where you can get a good bang for your buck. And that's where the M&A action's happening. The other thing that's likely to happen, I'm surprised it hasn't already, is that BHP going back and revisiting Anglo. Because that would have made them the world's biggest copper producer. And I still think they're keen to do that. They sort of botched it a bit. They didn't do their homework on the South Africans. But I think that M&A will probably come back into the market as well. And that'll get people excited about copper valuations as well. So I think as you said, everyone wants it. No one's bearish on it, but how do you get set? I just think that narrative continues to play out, because it's the one commodity that everyone sees a bright future for. Yeah. Despite whatever your views on lithium or whatever else, I think copper's a safe way to play it.
Can I just ask about REA? Now, I know that news has just sort of come to light, but where there's smoke, there's fire? Yeah,
let's ACCC investigating REA's market power. Well, it's not quite a monopoly, but it's up there with Domain. Domain's about to be taken out, right, by a very significant international player who's probably going to throw quite a lot of resources and capability at the business to create a more competitive environment in Australia. So it's a bit like, why are you bringing this kind of inquiry out now when the dynamics of the industry are just about to change? So look, REA's seeking car sales. It's the old rivers of gold, right? That's what Kerry Packer was talking about with those businesses. So they've got very strong market shares and very, I wouldn't say dominant business models, because if you are trying to sell your house, you can use Domain, you can use REA, you can list it yourself if you really want to. So
nobody does.
You can though. Yeah. Was it Purple Bricks? Didn't they
have
a crack?
Yeah, I don't think they
didn't last very long, did it? No. But so there is competition in the market, and most real estate agents have you using real estate and potentially Domain as well. So I just think, we've known about this for a while. I think it's a pretty well operating duopoly. And there is competitive tension between the two. So I wouldn't get too excited about this.
All right, I wanted to pivot back when we're talking about copper and commodities to China, because there was some data out of China today as well. What is that showing us?
Yeah, continued acceleration in that economy. So there's a couple of measures you look at: electricity production, freight volumes, and this one here, bank credit. And they're a more accurate reflection on what's going on than the official GDP, which, according to the former Prime Minister, is man-made, GDP numbers. So this is just looking at aggregate social financing to the real economy. And you can see it's been jumping around there. And this is the brake and accelerator that the Communist Party used to get this economy going or to slow it down. And we have had some choppy periods since COVID, but the latest data shows an acceleration in bank credit, or social financing. So that's government funding for the economy, and that's growing at 10.8%. So that's double the rate of nominal real GDP growth. So the shape of that suggests that they're re-accelerating their growth, which we've seen in other numbers like PMI data and this other stuff. But all the data today suggested a stronger Chinese economy, which is good news for us.
Absolutely. All right, Martin, thank you as always, Martin Crabb from Shaw and Partners.
So stock of the day today was a company that reported ALS. Francesco Distratus from Ords, Mark Moreland from Value 3 weighed in.
It's had very mediocre performance in the past and very erratic. So if I look at their, over the last 5 or 10 years, it really has been quite unreliable. So we lost interest in it a long time ago, and haven't looked at it since. So we sort of wrote it off as being too hard. Even things like what you just said there, where moving the head office to Europe. I mean, like, why would you? I don't know why, and I'd love to hear what the rationale for that is. But can you imagine what that will cost?
Look, I like the business. I think they're very good at what they do, particularly in the commodity space with assay sampling. They are using, I forget the name of the company, C79's new technology for X-ray samples. So they're moving in the right direction there. Not sure a lot about their life sciences. Obviously, it's testing food and crops and things like that to make sure they're consumable for humans. But look, I think there's a mixed sort of rating around the analysts in the marketplace. I think the share price is at a point where I'd be looking to either unload or just hold from here.
All right, let's take a look at some of the market leaders, and the jewellery maker Lovisa up there along with Capstone Copper that we touched on. There's been a couple of new substantial holders in Lovisa.
Yeah, interesting. Looks like State Street's one of them. Neuren had a AGM today and announced that its premenstrual medication trial will advance to the third phase of the US FDA approval process.
To the downside today, in the big end of town, Helios there. Of course, we've got HealthScope going into administration. Some investors, of course, concerned about the overall sector. You also had New Farm last week reporting a disappointing number.
There we go. REA also making the list late in the piece. Dateline Resources, not sure what happened there, but always makes me think of a podcast that I listened to. 4DS Memory was what we had on screen earlier when we were supposed to have 4D Medical, but both of the companies doing very well today.
Yes, that is me not remembering the correct codes. I've been told. Kingston Resources down 12% and a lot of weakness in some of the other. Now, MoneyMe, we're going to talk to them later in the week. They were down 7% today.
Interesting, so down to 14 cents per share. We get some data out tonight, home prices. That will be an interesting one because signs of the US housing market cracking have been talked about for a very long time. This is going back to March. This is very much backward looking data, and we also get the US Conference Board consumer confidence. You just heard what Martin Crabb from Shaw and Partners had to say about consumer confidence. In the States, apparently consumer confidence is very much being dictated along your political affiliations.
Yeah, I can imagine. All right, tomorrow here locally, we've got that monthly CPI data. I had a good chat to Paul Bloxham about that. You can find that online. Also, the RBNZ, of course, coming through with its decision expected to cut rates by another 25 basis points to 3.25%.
Some earnings, Fisher & Paykel amongst them, Goodman Group, Web Travel Group, AGMs, we have Life 360, Drone Shield, Vulcan Energy, which also had a good day today, and the End Coal. Jules, I just want to mention that the time is running out for you to register for our 3 Stocks 4 event. It is a cracker. Really great, really great. asset managers on board. And really looking forward to this one. It's going to be a festival of stock picks. Buys, if you like them, you tell us you do. You should register. It's free, of course, as always. And you just have to go to ausbiz.co/ and then type the number 3, and you'll get to see all of these faces.
Look at all those amazing people joining. All right, well, a quick look there. We saw where the market was, up 0.5% on the close. Similar gain on the ASX 200 today as we round out the session. I think the last read I saw was up about 0.5% as well. Yeah, 8,407 is where we've closed on the ASX, and of course Capstone was the leader today.
And I think you were right to point out US futures, E-minis for the S&P 500 and NASDAQ, both up by more than 1%. So we could see a positive session in New York as we watch European markets start to come to life.
All right, we'll catch you from 9:45 a.m. Eastern tomorrow. Have a great evening.